Hello everybody, Brett Doty here with the Blue Crew. Wanted to get another training out to you. This one is on the doctor loan that recently rolled out, this is April 28th, 2017. So we'll start out in the Security National Portal. I always reference this because this is where we're building everything out and creating accesses to all the information and data you need to be able to perform your job appropriately. We want to make sure that you can get the information right away and get those questions answered that's needed when they come about. So where we'll start is going into the main page. One thing I always like to show, just one little piece. So in the departments, up at the top there, that'll give you descriptions of what each department does, as well as contact information. So if you need anybody in a different department, that's where you can find it. So getting right to the work here, we're going to go into Concierge Resources, which is going to give us all of our credit policy, seller guides, all of that information. In this case, we're going into seller policy, credit policy. This is a non-conforming product, so we'll go into there. It's a ARM product, so we're going to go to Investor 09, which is Flagstars. Unfortunately, it doesn't reference it as being a doctor loan, but that's the doctor loan product. You'll note it when you open it up. It does say doctor loan on the heading there. So breaking out the different sections, this is a non-conforming product for doctors. They have to be licensed in it. It's for purchases and rate terms. Note that Security National doesn't underwrite them. We'll package it and we'll make sure everything's correct, and then we'll send it off to Flagstore for the underwrite with them. It's a 5-1 or 7-1 ARM, purchases and rate terms, as I had said, owner occupied, non-occupant co-signers, not co-borrowers, are eligible. Co-signers aren't on title, but they're signing for guarantee. That's the difference between a non-occupant co-borrower is on title as well. Your LTVs, one thing you really want to note here is there's a minimum LTV of an 80.01. In other words, they are requiring mortgage insurance on it, but you can go to a 97% with a 720 score to 650, and all the way up to 850 with a 90% LTV. So really opens to available for this special product. As you'll notice, the eligible borrowers are all doctor related. The non-eligibles are your typical ones, but I always will point out non-occupant co-borrowers are not allowed. So you have a co-signer, yes, but not a co-borrower, non-occupant co-borrower. So just remember that and what the difference is between the two. The credit, one thing I'd note on here is that the credit report must be within 75 days, not the typical 90 days. Typical, no judgments, liens, or collections. And then adverse credit events, there shouldn't be any of those within 5 years, so they should have real clean credit as far as that goes. Obviously, if they're going to be in their 700s, they should be in that state. Student loans, though, if they are deferred for at least 12 months, they can be excluded from the DTI. But if you have another borrower that has student loans for something other than medical, they would be counted. You got to have a minimum of 3 credit open lines in last 12 months. They do allow subordinate financing. I'm not sure why, if you're required to have mortgage insurance, why you'd have a second mortgage, but I'm sure there's a scenario out there that it could come about. On the mortgage insurance, it's standard coverage, but I also note that you can have borrower paid monthly, you can have single premium financed, as well as lender paid mortgage insurance. So you've got some options there to give the borrower different scenarios. General income, the big thing is you're going to make sure that they have a medical license. The income defined with an expiration date, that's got to have at least 3 years. So if they have a contract for work, it's got to have at least 3 years on it. Typical, if you've got gaps of employment, they're going to look at your last 2 years of earnings, and you're going to document it appropriately. Ineligible income, things that you'd want to make sure you understand, that is that you can't have like rental income from the borrower, single family, meaning no border income. Educational benefits would be like grants earned or student loans where you receive money. That would not be eligible for using as income. And if they receive stock options, you wouldn't be able to use that as well as part of their income. Projected income, that's where a lot of this is going to come into play. You've got a doctor that's just coming out, getting ready to go into the field. They'll either be hired on by a hospital or a practice. They've got a contract. They're moving into a new area. They've got to find a home. We'll take the projected income. They don't have to have been on the job for 2 years. This is where it really plays out nicely. So really want to make sure you're reading the guides when it comes to all the income. There is a lot of different ones on there. As far as assets, they've got to put 3% of their own funds into it minimally. Beyond that, they can have gifts and grants, and if it's eligible, community seconds. They could use business funds for down payment and closing costs, but not reserves. The underwriter will do a cash flow analysis on the business if so. Reserves require 3 months PITI. If it's a greater than $650 loan amount, then they're going to need 6 months. As we noted, gift funds are acceptable. Seller contributions, you can have 6% up to a 90% LTV and 3% from 90 up to 97. So, you could get the seller to pay some closing costs. We note that it is your typical eligible properties, and so you just want to make sure that you're following that. New construction, make sure they have a certificate of occupancy. And then also if the seller has purchased the property and is flipping it, they can do it, but they have had to have title for at least 30 days from the date of the signed agreement. That's a typical ARMS 5 and 7-1. You've got your typical 225 and 525 caps. Nothing unusual. It's a 1-year LIBOR with a 2.25 margin. Pretty standard in the industry. One thing that I liked about this that I just found at the end of the credit policy is if you had a property that was that you got under contract, you locked it, then something fell out and they're going to have to buy they're going to a different property, you can carry the lock over to that different property. So I want to show you on loan product information. You can jump onto that section, click the loan product matrix. You can download this to your computer. This will give you, all the general guides that I've discussed. And as you can see across the bottom there, there's all of the different products that we have listed on there. It's a quick reference guide. And this one I do reference several times to refer to the credit policy. For example, there's about 9 pages of different income types that you'd want to verify. At the top, you can click the link to guide and go over to the credit policy anytime you need to on that. I just did a scroll here to show, it's basically going in here from about right there on, if you count them. Look at all the different income options that could be there. Sometimes you have sophisticated borrowers already that are doctors that have different income sources. You want to make sure they're addressed appropriately. So take your time. It's a great program for the right situation, but you just want to make sure that you're reading the guides when you get one. If you've got one and you need some clarification, you can always reach out to the Blue Crew. That's what we're here for, is to help you put together more deals. Appreciate your time, and I'll talk to you on the next one. Thanks so much. Have a good day.